Are you looking to pay less in corporation tax? Fantastic, you're in the right place. In today's video, I'm going to give you 5 proven ways to pay less in corporation tax that you can start implementing today in order to pay less in taxes. So the first one is basically make sure that you're putting a salary through. So every person in the UK has a personal allowance. So that's £12,570 you can receive tax-free without paying any income tax. So you'll have this, your wife will have this, potentially your children who, as long as you're paying somebody from your company and they're doing some kind of work for that, as long as it's market value, you can't have your 15-year-old son getting paid 50k unless they've got some specialist skills that we could argue to HMRC. If they're a social media mastermind, coding, website design, then we probably could put that through. But if that's not the case, all of the salaries have to be in reward for services performed to the company. But most people, £12,570, that's pretty easy to justify. So make sure that you're paying yourself a salary, your wife's taking a salary. Does your mum help kind of clean the office and help with some admin here and there? Okay, fantastic. Well, if she's got her personal allowance free, that's great. It's tax free for her. Or it's still a massive benefit if someone's got their basic rate tax band available, especially with corporation tax now being at 25%. Actually, because of the salary being a tax deductible expense in the company, that means you're saving tax at 25%. And actually, if somebody gets a salary in their basic rate band where they pay tax at 20%, you're actually saving tax in the company at 5%, effectively 25% tax saving, less 20% salary, income tax on the salary. You're saving that 5% tax and you've got the money extracted from the business. That's the main thing there. It's extracted. It's in your pocket or in your parents' or your wife's pocket to do whatever they want with. And that's the main thing. You've taken it out of the company where you'd usually be thinking about income tax, dividends and whatnot. You've saved the tax and you've got it in your own pocket. And that's fantastic. That's what you need to be looking at doing, is how can we get it from the company into my pocket? And then if you wanted it to, you can loan it back to the company as a director's loan account to take tax-free at a later date. So it really is a win-win there. So make sure you're maximizing every single salary you can be paying from the company. The second is make sure that you're putting your motor expenses through the company. So whether you've just got a normal car and it's not a company car and you're basically just want to be reclaiming mileage, absolutely make sure you're doing this. It's so easy to forget about this, so easy to not track your miles properly. But ultimately, you still get 45 pence per mile that you travel for business purposes. So all the property viewings you do, visiting clients, visiting your accountant, going to a networking event, you need to make sure you record all of this because that 45p a mile, that adds up. 10,000 miles a year, that's £4,500 as a tax deduction, as an expense in the company, and that your company can then also repay you tax-free. So it's a win-win there. And if you aren't doing that, and if you are looking at company cars, that's the best result at the end of the day. If you can get a commercial vehicle or an electrical hybrid through the car where you can either lease that or purchase it, have the full amount usually come off of your profits and ultimately reduce your tax bill, without having to pay a too high benefit in kind charge on the company car for personal use. That's one of the best ways of doing it. If you can still get an electric vehicle, they are very tax efficient. For most people, if you buy it new, first year, 100% allowances. Imagine buying a £70,000 Tesla, bam, straight off of your profits, huge tax saving there. And then you only pay a 2% benefit in kind for driving that car around personally. All the electric can go through, all the maintenance, all the insurance. And basically, it's a massive tax win from your point of view. So make sure that you are putting all of your running costs where possible through your limited company. The third one, charging yourself rent. So ultimately, a lot of us work from home these days, and there are a couple of different ways that you can actually claim tax relief on working from home. So of course, you can claim the £6 a week flat rate from HMRC. You don't need to keep any paperwork or records. That's fine. That's okay if you don't want to do this or you don't spend too much time working from home. But for most people, especially if you've got a dedicated office, and quite frankly, you probably spend 50, 60, 70 hours a week in there working on your business, well, actually, in this case, you stand to better reclaim a massive amount of tax, because what you can then do is look at the running costs of your house, the total variable running costs, see how you can reasonably apportion that to the area that you use as a home office, and then claim that amount. So effectively, what you'd have to do there is you'd have to rent it from your company, from you personally to your company, at an amount that equals the expenses. So it's important that you have a contract for this and you record this on your self-assessment tax return. But the end result is you don't pay any tax because the expense equals the income. But then your company gets a tax deduction for this, and it can repay it to you tax-free as well. So make sure that you're charging your company rent if you're spending a lot of time working from home. The fourth way is charge interest on your director's loan account. So when you first set your business up, the chances are you loaned money to the company, whether that's to buy properties or whatever it might be, or even expenses that you're not taking out. So I know even just in this video and all the others, I've mentioned here renting your home to your company, putting your mileage through. That could easily be £10,000 going to your director's loan account. If you don't actually take that out, that's sitting there as a credit balance, money that your company owes to you. And of course, as with all loans, you can charge interest on these loans. And basically, it's a very tax efficient way to take money out. So as of course, you get 25% tax relief now. Corporation tax has gone up. As long as it's in your basic rate band, you'll get the highest you'll be paying is 20%. You've still got your £1,000 personal savings allowance. There's potentially the £5,000 tax-free savings nil rate band as well that's available. And basically what this can mean is it's very tax efficient to take interest income from your company. So if your company owes you £100,000, which is great news, you can charge 10-15% interest on this. That's tax deductible in the company and goes to you either tax-free or a very, very low and efficient tax rate. So make sure you're utilising this fantastic opportunity to pay less tax. And then the last one at number 5 is look to see what assets you can purchase through your company. So I'm sure a lot of you've got iPhones, laptops, all of this stuff where you might usually purchase this personally because, yeah, you might do your online shopping or you use your laptop for personal online banking reasons. But actually, the vast majority of time, 95%, all of this stuff is for business. If you're doing videos, fantastic. Get your camera equipment, get the podcast mics. That is a business expense because ultimately it's going to help drive revenue to your business. And, HMRC, if what you're purchasing is going to earn them tax revenue, it's only fair that you can actually get the write-off for the initial equipment expenses in the first place. So anything that you're looking at purchasing, so a great example of this would be in our property business. I wanted a drone. I see so many people flying around, they look pretty cool. But actually we put this through a property business as an expense because we were using it for property purposes, looking at roofs, getting surveys, getting before and after shots of the different developments and the projects that we were going on. So that's just a kind of creative way to look to see how you can justify things as a tax deductible expense. So hope you found this video useful, guys. That's 5 ways that you can start paying less in corporation tax. Any others that you don't know of, drop them in the comments. Be more than happy to see how I can help. Otherwise, please do give this video a big thumbs up and hit that subscribe button. See you next time, guys.